We are just hours away now from a big decision from the U.S. Central Bank. Today at 2 p.m. Eastern Time, Jerome Powell is expected to announce cuts to the interest rate. This is the first time it will have happened in over 4 years. So for more on how this will affect you and me, I want to bring in Money Rush contributor Ted Jenkin. He's a wealth manager and president of Exit Stage Left Advisors. Good morning. So what do we think this interest rate cut will be? We've heard a couple of numbers, anywhere from 0.5%, a quarter of a percent. What do you think?
I think it's likely to be a 0.25% unless the Fed wants to get more aggressive and make it 0.5%. But you know, Holly, the Fed walks a slippery tightrope right now, saying, how do we keep inflation at that 2 or 2.5%? And how do we make sure that unemployment doesn't spike to 4%? But even if they only do a 0.25 point today, my philosophy on this is that you might see a full 1% cut before the end of the year, at a minimum 1% over the next 12 months. So I think you're going to see rates come down. People forget also it's important for the Fed to cut interest rates because we have $35 trillion of debt.
Wow.
And in our fiscal budget, after Social Security, Medicare, Medicaid, and defense, the number 4 line item on our fiscal budget is the net interest on the debt. It's the interest we pay ourselves. And that's why I've got to loosen that ankle bracelet just a little bit.
Okay, but what does that mean for us then? So when I, go to the grocery store, I pay my mortgage, or I'm looking at a new car, how is that going to affect us every day?
So the number one word that people want to be thinking about at home is variable. If you have any kind of variable rate debt, you have a credit card, you have a student loan, you have an auto loan, you have a home equity line of credit that's on a variable rate, that's likely to come down. But I think the important part in here, and we're seeing this already, is that mortgage rates are coming down. They're at 6.2 or 6.3% for a 30-year mortgage. Over the next 12 months, if that comes down to 5%, it may allow homeowners, new homeowners that is, Holly, to have a more affordable mortgage. And importantly, it might make people that got those COVID-era mortgages at 3% to say, you know what, at 5%, I might be able to sell my house and get into a bigger house, and that sort of frees up the logjam in the real estate market.
And I know a couple other areas, you mentioned credit cards, and also savings accounts and car loans. So people looking to buy car loans, because I know even used cars are very expensive. So how will it affect those sectors?
Yeah, well, used car loans are roughly 8% right now. Home equity lines of credit are at 9%. You might see that auto loan go from 8% down to 7% or down to 6.5%. So again, on a 60-month note, it will make it more affordable. But on the other side, you mentioned, if you have money market or savings accounts, those rates are likely to come down. So this might be a good idea for people to go to the bank and say, let me get a CD or a certificate of deposit for 1 year, lock in those rates now, so when interest rates go down, I'm getting a better rate on my cash.
And what about what everybody wants to know, the grocery store, right? I go and eggs and even gas, but a gallon of milk, all the things that we use every day, grocery store filling up the tank, how is it going to affect us there?
So Holly, I don't think it's going to help at all at the grocery store. Taylor Swift has a line in her song. He says, it's me, I'm the problem. And the problem here, quite frankly, Holly, is the U.S. consumer. We can't stop spending. We have an insatiable appetite to spend. And until the American consumer says, I'm going to spend less or I'm going to go for a lower value brand. This is why Amazon's coming out with their Amazon Saver brand to compete with Aldi, because Americans have to spend less. Until that happens, I don't see prices at the grocery store coming down just because the Fed cuts interest rates.
All right, well, we have to leave it on that note. But Ted Jenkin, thank you so much, wealth manager and president of Exit Stage Left Advisors. Thank you for your insight as always, and let's hope it's a big cut.
Yeah, big cut, half point.
All right, after the break, it's whether or not